Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of December the 4th, 2023. Now, as we move into year end, we're likely to still see some volatility in the first 10 to 12 days of the month. So let's begin with the dollar index. Now, once again, we want to make sure we're using the current monthly, yearly, quarterly opening price. Again, rolling performance model is in most cases lagging and can provide false signals, as we've seen many times in this calendar year. So the current monthly opening price is coming in at or about 103.35. We have the current yearly opening price at 103.66. The quarterly has firmly shown the dollar's downtrend long before it actually started to move. It was struggling, holding above these particular levels. But when we bring all of this together with the Vantage Point long predicted and our T-cross long, it allows us to isolate very specific levels and then get validation from the point in time indicator, meaning that as long as we can hold below that monthly opening price at 103.55 and the yearly opening price at 103.66, then the T-cross long at 103.97 should provide an additional backstop of resistance for selling dollars. Now, the month of December historically is very, very poor for buying US dollars, but we will get some buying in most cases the week of the non-farm payroll, which is next week. So again, the Tuesday after the non-farm payroll number, either way, the dollar usually sells off, but in the month of December, it's particularly weak. So right now, our structural bias, the indicators are starting to rise slightly here. We've got a little bit of volatility there on Friday from the Fed comments, but not enough to get any real dollar buying. But I do believe we will see some next week. But either way, we would be looking at shorts into that T-cross long should we be able to pass over the current yearly opening price. Because again, guys, if I took a random 365 days and went back and said, okay, well, that would put us up here somewhere. One could even interpret that as it's somewhat bullish. But again, the using proper anchor points in your trading will help validate weekly, daily, and monthly trades. Very, very important. So the indicators in Vantage Point, slight bit of the neural index strength is picking up on a little bit of weakness here, but not an over amount, excuse me. We're still above the zero line. Our predicted short, medium, and long-term differences are rising. Now, the predicted RSI is sitting at 38.4, and basically I've got a 60-40 split here because, again, I'm not interested in buying overbought, oversold signals. No, I don't want to tell the market which direction to stop and turn and go the other way because, again, you can see that you can go into an oversold condition many times just as a rally is starting. So we want to be very cautious with that. Before we want to look at buying US dollars, I would want to see the predicted RSI above the 60 level, and I would like to see preferably the market above the Vantage Point T-cross long at 103.97, but I think that is very, very unlikely going into the month of December or as we move forward into the calendar year end. Because remember, this is the fiscal first quarter for the US. The fourth quarter, that ended on October 1, and that's usually it for dollar strength to any real significant amount. Now, this rally, or this rally to the downside, I should say the sell-off in the dollar is pumping life back into the stock markets. But once again here, guys, we want to make sure we fully understand where we are in this particular rally. So if we use the current monthly opening price, very important, 45.59, we are firmly above the yearly opening price. And again, going back into March when we looked at that, and the markets, the analysts are saying, oh, the equity markets are in bear market territory, and then for it to turn around and rally almost 20% is somewhat comical. But again, with that rolling performance model, it often gives false and misleading information. So at that time in March, you can see as we go back here into that time period that using that current yearly opening price, it allowed us to basically say, well, wait a minute, the market's not actually in bear territory, it's positive. And then we've had a significant rally off of that particular area back in March. So again, if we look at things where we're at right now, then there's several arguments that could be made that we're overbought. But again, always look at this, guys. We've been technically overbought on the RSI since the beginning of November. So if the market does finally turn lower, then does that validate the overbought condition? My argument would be no, it doesn't validate it. So what we need is the validation of that is to break down below the current monthly opening price and the Vantage Point T-cross long. That level is coming in at 4,500. The quarterly, the equities are having a very, very good quarter here, and you can see that this was accurately forecasted back on the beginning of November. I actually did it in this particular presentation on the weekly, saying, okay, if we can cross over these two predicted moving averages, then we can extend higher. But as you can see, while the predicted high and predicted low for the day are very, very powerful tools, one of the questions I got from last week was saying, well, I'm not really getting a pullback to the daily predicted low to buy this. So this is the advantage of using the F8, which is the long-term crossover with just the predicted moving average. And you can see that every day we're in constant contact with this blue line, and that can be used to buy from. So that level for next week, 45.69, our T-cross long coming in at 4,500. So we know where all that support is, but I would like to see us hold above 45.59. But I do believe a minor pullback is in order here before we get a more significant rally going into month end. Now, gold prices again are firmly benefiting from this dollar sell-off, but in my respectful opinion, and again, looking back at these weekly outlooks, I had been very adamant that this was another, just like the equity markets back in March, this was an excellent buying opportunity in gold. The more they tell you that the pundits tell you to sell something, the more you should be looking closer at longs. So again, when we identify using the current yearly opening price, not a random 5 days, random 30 days, random 365 days, that doesn't give you the kind of anchor point where you can actually validate a trade. So when I look at this right here, if I consistently stay below here and break below this yearly opening price, I would be in full agreement that shorts are validated. But that didn't happen. Price completely stalled around this invisible support, and now we've had a massive rally on gold back to the upside, where we would be expecting this in mid-December, mid-November, either way. But it is gaining further momentum here, and December and January are usually pretty good seasonal patterns. Provide good seasonal patterns, excuse me, for buying gold. So we're well underway here, but I think a pullback is reasonable to some degree. So we would identify that using the two blue lines here, the lighter colored blue and the darker. That's the long predicted at 2040, and you can see we've got the T-cross long at 2005. But our current monthly opening price is 2036. So if we do get that pullback, then we have a couple of areas where we can buy from. And then as it starts rising back off the Vantage Point predicted moving averages, then we can have limit orders to buy it when it goes back, assuming that we come down and correct lower first. When it crosses back over the current monthly opening price and the current weekly opening price for that matter, then we can buy or add to contracts. So again, there's a lot of different ways this can be done. But for now, price structure here is still relatively bullish for gold. But whenever I see a bar like this on a Friday, very often it sets up to be a bull trap or a bear trap if it was a big bar to the bottom. So I would be looking for a pullback next week between 2040 and 2005 to reset those long positions. Light sweet crude going into next week, again, very tough quarter, and this came right out of the gate. So once again, guys, I'm going to sound like a broken record, but I get a lot of questions on this. What do you mean by an anchor point? What's the difference? Well, the difference is Quarters don't start at random points, guys. They're very specific when the first quarter starts, second, third, and fourth. So as I start going into the actual fourth quarter, then I'm not usually looking at buying oil. I'm looking at buying other commodities, silver, gold, Bitcoin. These are top dogs for me. But again, whatever works for everybody. But when we look at these levels right now, we can see that the quarterly, the monthly, the yearly, they're all stacked up against oil here. And when it crossed over the current yearly opening price, that led to a substantial move down in oil. So again, we had a little bit of a push up here, and you'll notice we came dangerously close to 80.73, the current yearly opening price. We got up as high as 79.60, and then it was a bull trap, guys, and then down it goes. So the trader that's using that rolling performance model gets a false signal, buys it, he stopped out. So again, this is a free video, just advice to benefit the masses. There's things you can look at to see if it can improve your trading, because I do run into this a lot. So right now, the indicators are bearish in oil, but we've got some pretty heavy verified support down here, down to a low at 72.37, which I think is likely to contain oil prices for at least for 2023, but it will be, you can expect further volatility. Now, Bitcoin finally starting to show some life here. We've come through. Usually with Bitcoin, November is a much tougher month, and it's still fared very well. It's closed out the month, starting December strong again. But as you can see, using the proper anchor points, guys, and again, using that monthly opening price, 34,651, we've held above the monthly opening price the entire month, the quarterly opening and the yearly opening price. So again, and then we're simply using the T-cross long to buy, and actually I've done quite a few shorts, as we've discussed on here too, around the 38,000 mark, 38,418 to be more specific. We were not getting any buyers up there, but December could be a better month for Bitcoin. It's certainly starting off well. Bitcoin, it can benefit from higher gold prices, and it can benefit from higher equity prices, and that's what I suspected months ago when I discussed it on here, that I feel that Bitcoin could possibly correlate also to gold. But clearly, we've still got buyers. Heck of a year. Bitcoin's more than doubled this year, so longs, well, still on the table until such time as the Vantage Point indicators suggest otherwise. Now, when we look at some of our main Forex pairs for next week, the euro seeing some volatility on Friday, but we can also assess we came back down to the T-cross long, 103.60. We hit that and bounced out of it. So once again, we will look at that current monthly opening price, 108.88. The second we start holding above that level, the euro is likely to extend higher. Right now, we've got very good support, 108.60, but additional support down into the lower 107 area. But I think that will be very difficult. But the indicators are somewhat mixed here. But we can assess here using that 60-40 split on the predicted RSI. You can see that we didn't have any downward momentum here, even though we've crossed over the long predicted, this lighter colored blue line. The RSI was saying, no, there isn't a lot of momentum here. And I will say that the euro predominantly has a very high correlation to gold. So if we get a little bit of a pullback in gold, then we should see a pullback in the euro this week. But that would be a buying opportunity because, again, firmly above its yearly opening price, its quarterly opening price, and the dollar not in the best place right now. So again, any pullback, and again, we're going into a week of known dollar strength, but it's likely going to be much smaller as the market starts to price in rate hikes or rate cuts, excuse me. So when we look at the US Swiss franc again, this pair basically mirrors the dollar index. So if the dollar index is not doing well, then in most cases this pair is falling. So again, another alternative to using the predicted high and low only in our trading, I prefer to use the long predicted. And you can see that this is very, very easy trading And if the market doesn't make it to the Vantage Point predicted high for me to sell into, then I will simply use the blue line by itself as a pivot area. So for Monday's trading, we can, because again, this is an outlook, guys, not a recap of something that's already happened. 87.51, 88.30. Again, we can see a very well structured chart here that's not congested with 50 different indicators. What it's got is basic price structure, intermarket correlations, predicted moving averages. And I can use that predicted moving average as an entry point. So if I look at this right now for Monday's trading, we're looking at a very minor predicted high of 87.21, but I would be watching very closely for a short-term long trade here if we get that dollar strength. But once again, using overbought, oversold, accumulation, distribution, whatever you want to call these different terminologies, you can see that we went into oversold territory very, very quickly. So what I would be looking for here is a breach of the predicted moving averages, which were for now that's going to be very difficult, but our T-cross long is likely to contain any dollar strength this coming week. Now, the pound dollar, once again, the pound dollar having a pretty decent week last week. And again, I'll just clean up some of this chart so we can see it a little more clearly. The market structure using proper anchor points, yearly opening, quarterly opening. I've even got my weekly and monthly opening price in here. So the new monthly opening price on this one is 126.24. We've closed very strong, 87.10, but you can see that to begin the month, one could argue, based on the Vantage Point indicators, based on using that current monthly opening price, one could buy right off the open on Friday. And it's a pretty darn good trade. So we've just got to watch out for this verified resistance high, 127.33. And again, always remember, guys, the beginning of the month, the first week of the new month is usually we see some dollar buying. So can't rule that out, but if we get a pullback, we can identify those areas. The long predicted 126.45, the T-cross long at 125.17. So I like to pick them up between these two blue lines. But if we're holding above the monthly opening price, and again, December is usually a very poor month for the US dollar, then we may not get below the monthly opening, and you can use that number of 126.24 as a potential entry point. But again, if I went back a random 5 days or a random 30 days, then you wouldn't have that type of an anchor point there to gauge whether this long is still viable or not. So, and if we do cross below the monthly opening price, then you can put a limit order below that too. But right now, the indicators are saying we are going higher. Now, with the dollar yen, as I've talked about over the last few outlooks, that predominantly, again, December is not a good month for the dollar and it favors the yen. So even with the carry trade, we can assess here and we look at the current quarterly opening price using that, leveraging that price, 149.52, then you can see that as soon as we crossed over the current quarterly opening price, the natural retracement point was back to it, and then we failed again. So again, if I went back and just picked and choose 5 days, 30 days, 15 days, 365 days, I wouldn't have the luxury of being able to leverage that anchor point in to confirm my trade because believe me, it's a very dangerous short because of this carry trade. But I also think the market's pricing in rate cuts from the US, and that will affect the carry trade. The interest rate differential between Japan and the Federal Reserve is potentially in the next year is likely going to shrink. So that will definitely affect longs on this pair. So right now the indicators are mixed, excuse me, but firmly below that. So our current monthly opening price 148.20, and we've got our T-cross long now. That's coming in at 148.94, which has crossed over the quarterly opening at 149.52, which is a very bearish signal to say the least. And combine the seasonal pattern of dollar weakness in December, well, we just got to get through a couple of days, the first week of the week of the non-farm payroll number, and that should trigger additional shorts. But watch out for volatility with this pair. Now, when we look at the US Canadian dollar, once again, we're at a make or break area here. And my view is the Canadian dollar is only benefiting from dollar weakness because the Canadian economy is worse, far worse, in my opinion. I believe the Bank of Canada will have to cut. So we've crossed over this, but we did it on a Friday, guys. And again, the GDP coming out of Canada is nothing great. The labor reports are nothing great. Inflation's coming down. Oil prices are down. But the Canadian dollar, much like the Aussie and the Kiwi, feeds off of equity market strength. The S&P is going up, then usually this pair is going down. Aussie US is going higher. New Zealand US is going higher. So be careful, but this again, using the proper anchor points, we can see 135.60, 135.51. All of our resistance is sitting right there. So if this can't actually hold below here, then we're likely going to see a reversal. So keep an eye on that S&P 500 and keep an eye on these two critical areas next week, 135.60, 135.51. If you do want to short, guys, that's where it is because this is a better example of using how to use the predicted high and low. The predicted high for Monday is 135.49. That's so you've got a lot of resistance sitting right there. And US Canada is notorious for a Monday Tuesday reversal. So if it does go up on Monday, the probability is it could go down Tuesday or Wednesday, but that's where all the action is going to be, right around 135.60. Now, when we look at the Aussie and the Kiwi, virtually identical, very similar to the USCAD, just reversed. So again, when we look at this, let me go back here just for a minute and I'll pull that back up so everybody can see where you can hit that, apply that right across our entire template here. So the Aussie dollar for next week, what we're going to see here is the same thing. The Aussie is still below its yearly opening price. So this could be a place of value to sell US dollars because it's likely going to try and take a run this month at 68.17. I would say there's at least a 60 to 70% probability that we will hit that level by month end because again, this is an outlook, guys, not a recap of something that's already taken place that I'm discussing. We're looking at future price targets here. So right now, if we can hold above the Vantage Point T-cross long that comes in at 65.49, then that is a potential target for us. And the indicators, they are mixed, but they're still bullish. The Kiwi is a very almost identical trade. When we look at this, our long predicted coming in at 61.46, but 60.59, that's your big level. We hold above that, but it is entirely possible that we could hold above the monthly opening price here also at 61.55. And if we do, then again, 63.50 is definitely in our crosshairs. So with that said, this is the Vantage Point AI Market Outlook for the week of December the 4th, 2020.